Hi everyone, I'm Naomi Wilkins, new business educator. Today I'm not recording a tutorial, but I thought there may be some people who would be interested in how I prepare my T2125 Statement of Business Activities for my personal income tax return. As a sole proprietor, that is a non-incorporated business owner, I do not receive a T4 like a regular employee does. I cannot create a T4 for myself. Instead, I am self-employed and I am taxed on my self-employment income. My self-employment income is the profit of my business. That is the revenues minus the costs and expenses. We report this to CRA within our personal tax returns each year on a schedule called the T2125 Statement of Business or Professional Activities. Whether you are planning on doing your own taxes this year, or if you are planning on using a tax preparer or an accountant to file your taxes this year, it is very helpful to know about this T2125 form and what totals are needed to create it. What better way than to share my process? Let's get started. So this is the end goal. This is the T2125 Statement of Business or Professional Activities that's included in your personal tax return each year when you're self-employed. And we can see that we have the identification, any websites that you're making money from. This is where you put your revenues. And here's where you put your direct costs. And then this section, part 4, as you can see, this is the part where you put in your overhead and your other expenses. This is the section where we talk about your business use of home or your home office. This is the section where you list your assets. Not that you list them all, you list any assets that you purchased or disposed of in the year. And then this is the part where you talk about how much your total assets have depreciated or lost value over the year. This is the section where we talk about the expenses related to your vehicles. And that's it. That's as simple as it gets. And I don't actually put the totals right into this form. I use a spreadsheet right here that has the boxes of that form in such a way that it's easier for me to use and populate. So again, here is the revenues section. Here is the direct cost section. Here is sort of the other expenses and overhead section. Here is that business use of home, and here is that vehicle. And here's the part with the assets. You can do your asset list over here. So what I'm going to do next is I'm just going to show how I fill in all the boxes of my spreadsheet. What I have here is my Quickbooks, that's what I use, and this is the profit and loss. You can find the profit and loss under reports. Woo, there it is, reports. You can click on that, it'll take you to a list of them all. And you want to choose your profit and loss report, and then you make sure that the dates are January to December. And then you can click Run Report and you should get your profit and loss for your business. And I'm going to export this over to Excel. Now, I'm not going to use my actual numbers today. This is what it would look like when you export it over to Excel, and I've changed the numbers a bit so that you're not seeing the actual numbers of my business that I'm going to be filing. So once I've exported this over to Excel, notice if I click this little part of Excel in the corner right here, it selects the entire sheet. And I'm going to go Control C, and you can see that it sort of dances around the edges there. And then I'm going to go over to my T2125 spreadsheet and go to this first tab, and I'm going to make sure that A1 is selected. That's the name we call this cell, A1, and I'm going to go Control V. And then it just pastes it right in here. I'm going to make this a little bit bigger so that you can see it a bit more maybe. Let's make it just 115, a little bit bigger for you. So now what we're going to do is we're going to start populating this section of the T2125. This is the direct revenues and costs and expenses of your business. This is not the mixed use, those that have a bit of personal and a bit of business. This is just the ones that are specifically business only that wouldn't have happened if you didn't own a business. First of all, I let the profit and loss drive. So that means that I let the profit and loss tell me what's next to put on. That way I make sure that I have not missed anything on my profit and loss. So the first one I see here is total income. Now I'm not going to worry about all these because this just happens to be the total. And I look over to my spreadsheet to see where that would be. And I can see that it would go here in net. So there's this box, which is income including HST. This box is the HST, and this is the net. That is the before HST amount. So I'm going to put an equal sign. Do you see that right in that box? I'm going to go back over to this tab, and I'm going to click that. And you see it's dancing. That's the one I'm using. I hit enter on my keyboard, and it jumps in there. See, it recognizes that I want sheet 1, B14, and it puts it right in there for me. Now, every time I do that, this is my personal way of doing it, is I go ahead and I fill this in peach so that I know that I've done it. Let's make it a little darker. And then on this column, I say where I put it. And I'm just going to say income because that one was easy. And just while we're on the topic of income, you can see that the form is going to ask us for the income including HST, then the HST separate, and then the amount before HST. And I've already gone ahead and prepared some numbers for this fake company here of what the HST could have potentially have been. And so, for example, my business is a quarterly filer. And so each quarter I would say what my sales were. I would say what the HST I collected was on those sales. And when you file your HST, you also say what the HST or GST on your expenses is. And we call those ITCs or credits. And so your net tax would be how much you collected minus how much you paid on your expenses for tax for HST, and that's how much you remit to CRA. But for the purposes of the T2125, we just need to know this column, the HST collected. So I'm going to go here, I'm going to say the HST collected equals, and then click that. And there is the HST that I collected. So obviously, I'm going to say equals here, and I'm going to say the sales plus the HST, enter. There is my income including HST. So again, let's continue down here. Again, I'm not going to let this form drive me. I'm going to let the profit and loss guide me as to what I'm going to be doing next so that I don't miss anything on my profit and loss. So the next one here in line is advertising. I look over here, where would I put advertising? Kind of right there. And then I'm going to click this, and you can see it goes right in that box because I said equals, and then I clicked on B18 of sheet 1. And as soon as I do that, I'm going to make that peach, and I'm going to say where I put it. Advertising, like that. Then bad debt, we're going to come over and I'm going to put the equals in this box, enter, and right away I'm going to go back, peach it, and then say where I put it, bad debt. This really helps for if you're going to get audited or reviewed. CRA wants to know where the totals that you've put on, or somebody has put on this T2125, where they're coming from. And I call this the mapping. So it's easy to say, oh, well, this number is made up of this and this and this. So you can see where you've put it on the T2125. So here we go. We got bank charges. Where would we put that? Interest and bank charges. Put the equal sign. Bank charges right there. And I'm going to make that peach and just say interest and bank charges. Business fees. This was my membership with the local Chamber of Commerce. And so I'm going to put that to business taxes, licenses, and memberships. This business taxes, it's not referring to like the GST or the HST or the income tax. It's talking about sort of like the dues, your licenses, the memberships that you have to pay for being a business. So this would fall into that category right there. So business fees. And I'm going to come back. I'm going to make that peach. And I'm going to say business memberships. Just put that there for now. Okay. Business insurance. And again, this is the direct cost of business insurance. This is not your vehicle insurance. This is not your home insurance, and this is not your life insurance. This is only insurance related to the business and it only happens because you are a business. So I'm going to go over here, and where would I put that? Insurance. Now it just says insurance, but it is assumed that everything on this section of that form is just the direct costs for your business. Here's where you put your home insurance. Here's where you put your vehicle insurance. And there's nowhere that you put your life insurance. So we're going to go and say equals, and I'm going to put here. Put that, and I'm just going to say insurance. Business website expense, we could put this in a couple of different blocks, but for me, I put this under my advertising box. So I'm going to click that advertising, and you can see I've got the equals up here, and I put a cursor at the end. I just clicked there, and I'm going to hit the plus. So just the plus. I'm going to go back over to sheet 1, and I'm going to click on that cell, and you can see it's added them together for me. And right away, I'm going to go back, I'm going to peach that, and I'm going to say advertising, because that's where I put it. Cell phone. Now I've only put my portion of the cell phone expense on here. This is not my family's cell phone. And if I find that I'm using my cell phone sort of more for personal, maybe I've put only like 75% of my cell phone expense in this bucket. We can talk about that another time. But again, this is cell phone for business. So I'm going to come over here, and I could put it under office expenses, or I could put this under utilities, because some places call this utilities and telephone. You can see that there's office expenses and office stationery and supplies. That really bothers me, because it feels like when they say office stationery and supplies, like, are they saying office supplies? I don't think so. I view this as just general supplies. And office expenses are those things for running the office. So that's kind of how I interpret this. CRA, if you're listening, please change this to say office stationery and general supplies so that it's not so ambiguous. So what we're going to say, where was I at before I went on my tirade? Cell phone. I'm going to put this one actually under utilities. Again, this utilities is not my home utilities. Now, if I do have like a brick or mortar location, like maybe I'm a restaurant or I'm a store, this is the utilities for that location of the business. But for my home utilities, this does not go here. But I'm going to go ahead and put my cell phone in this utilities bucket. Again, it could have gone into the office expenses, like what I need to run my office. Could have gone in either one. And I'm going to go right back. I'm going to peach it. I'm going to say where I put it. Next, we're going to go to design services. Now, I'm not selling things that have been designed, so I don't consider this direct cost. I've used this design services for my advertising. So I'm going to put this under advertising because that's how it applies to my business specifically. So I'm going to put a plus here, just like I did last time. And I'm going to say, where was it? Design services. And then I'm just going to go back. And I'm going to put, say, this went to advertising, like that. I'm going to make that peach. Okay, digital assets. This is you don't have to have this bucket. I have this bucket for me. Again, this is sort of based off of my own original profit and loss. But the digital assets, like if I were to buy music for my YouTube videos, or if I were to buy a font or some stock photography, that's where I've put this cost, just so I can track how much I've spent on those digital assets and music and so on and so forth. So I think I would put this under, I'm going to put it under advertising for me, again, because it's mostly to do with advertising for me. Oh, I peached it before I added it. That's because I've been talking. So I'm going to put a plus sign under advertising. I'm going to put it there. enter, and then advertising. Okay. Now, I didn't have any interest on my credit cards this year. Legal and professional fees, I actually have written a book, and so I had an editor read that over for me. So I put his costs under there, and we have professional fees equals right there. Boom. And I can go back. I'm going to say, whoop, I haven't written yet. And I'll make that peach. Now you can see that on this QuickBooks profit and loss that I have a header title, and then I've got two subcategories here, and that's the total of both of these. So I'm not going to do this one, and I'm not going to do this one. I'm only going to do this one. That's what we did up here. I didn't do all of these. I just did the total. So I'm going to redo that over here. But meals is a bit different. With meals, we can only claim 50% of our meals expenses. And this is not just my everyday coffee. This is coffee when maybe I've gone out to do some site work. The meals, this is not like eating my lunch every day. This is for when I'm either meeting with a client or maybe I'm traveling further away than my normal location. So again, these are foods that you wouldn't have had if the business didn't operate. Even though they are directly related, like meetings with clients or what have you, we still can only claim 50%. So this is how I do that. Over here, here's the meals box. I put an equals. Then I put the 92 and I divide. See that little slash up there? By 2. So now you can see that that 46.45 is this 92.90 divided by 2. And I even say that. I say this is meals div by 2, like that. Next, we've got office supplies, and that one was pretty easy. It's office supplies. There it is, office stationery. So I'm going to go ahead and put that one in there, and I'm going to say office supplies, office stationery and supplies. I'm going to make that peach. Then we've got production supplies. That's what some stuff that I bought to make some of my YouTube videos. And again, because this is general supplies, I'm going to put a plus. And I'm going to put production supplies right there and say office stationery and supplies like there. Now this software for business, this could be like your QuickBooks or, certain softwares that you have to pay for running your business. This could go under your office expense, but not for me. So I'm a bookkeeper, and so because of this, I do resell the QuickBooks subscriptions and maybe my Receipt Bank subscriptions, or Dext as they call it now. So I would put this actually under purchases, what I consider purchases for reselling, and that's going to go up here, purchases. So if you were, for example, if you were a landscaper and you bought brick to install into your client's front landscaping, purchases is where it would go to. If you were a retail store, the things that you sold would go to purchases. If you're a restaurant, the food that you buy to prepare and sell would go to purchases. So I'm going to put an equal sign. And again, this is just because I'm a bookkeeper and I do resell some of those subscriptions. And I'm going to say this is purchases. Now, this is just a Naomi thing. This is not, I haven't seen this other places, but subscriptions is so vague. So I usually have different categories underneath subscriptions. And one of the categories is digital tools. And so for me, digital tools is like Canva or later.com or Adobe or Photoshop or what have you. And so these are tools that you're paying a monthly subscription for that you're using for your business. And again, I'm going to put this to office expense. So let's go over here. I'm going to put an equal sign there. Put that there. Because it includes like Canva and later.com, I could have put this to advertising, And, in a couple of years, I wouldn't remember, which is why I put right here. I say where I put it, because this way you're going to forget everything that you do. In fact, most of the time I open up my last T2125 from last year to see where I put stuff, so to keep it in the same place. Office expenses, like that. So we have now put everything on this profit and loss onto the T2125. So the next step that I do is I just make sure that this taxable income total so far is correct and I haven't missed anything or made any typos. So first of all, what I'm going to do, obviously it's not going to be exactly the same. This one's 4377 and this is 423, and that's because for this meals right here, I divided it by 2. Right? So what if there was an additional 4645? So I'm going to say equals this, subtract another, because this is the profit, right? Subtract another 4645 like that, enter. And it says 437729, which matches the 437729 over here. So that's perfect. And if I haven't yet, I'm going to hit save, and we're going to move on to the next section. Before we move on to the next section though, I should just take a moment to discuss some of these categories that aren't applicable to my business, but might be applicable to yours. For example, direct wages, that would be where you would put your payroll expense. Subcontracts, that's where you'd put your subcontractor expense. Important to note, if you're in the construction industry, you are going to need to do up T5018's Statement of Contractor Earnings. And I'm going to type that here, T5018, for you to write that down, because the total of all your T5018s that you issue to your subcontractors, that total should match the amount that you've claimed for subcontractor expense on your T2125. Now this T5018, this is not like a T4 or a T4A. It really is just for contractors in the construction industry so that CRA can just make sure that nobody's not claiming their income. And when you create these, you are going to need the business number of your subcontractors. And if they don't have a business number, if they're not registered with CRA to collect GST and HST, you are going to still need their social insurance number for these. Moving on to the next box, other COGS. COGS stands for cost of goods sold. So for example, in here, you would put things like rental equipment. So if you rented equipment to do a job, you wouldn't have needed that expense if you didn't do the job. So I consider that cost of goods sold. So rental equipment goes in, would be an example of another cost of goods sold. Moving down the list, management and admin fees. I think I've only seen that used once. Rent, again, this is not rent for your home. In fact, I don't even consider this equipment rental. I put that under COGS up at the top. This rent is specifically if you had to pay rent for another location. So maybe you're renting out the space for a store, or maybe you're renting out a yard to store your inventory or equipment or whatever. Or maybe you have a storage unit that you're renting. So that is the rent that goes in this box, just the direct costs of your business. Maintenance and repairs, that again, it's not for your home or your vehicle. That's going to go in the other sections. It's for maintenance and repairs on your equipment or any property that maybe you're renting. Wages and benefits, it's another place to put your payroll. So sometimes people split it up. Sometimes people put, maybe they have laborers on their crews and that goes to the direct wages. And sometimes they just have office staff that they'll put as an overhead and they'll put their wages in here. I tend to just put all the payroll expense up at the top. And in this box, I would put something like maybe the workplace insurance, like WSIB or WCB. Next, we have property tax. Again, this is just any property tax that you'd have to pay in regards to a location specific to your business, not for your home. And travel, of course, if you are traveling, it costs money to make it to a conference or a faraway job site or something along those lines. Utilities, as we discussed, that is not utilities for your home. That is utilities for your location if you have one outside of your home. And remember, we have utilities in here because I also put my cell phone in here. So some places you'll see it say utilities and telephone. Non-vehicle fuel. A lot of new business owners don't realize that if they have equipment that's not their car that needs fuel, like a tractor or something like that, then they have to keep track of those fuel costs separately because the vehicle fuel, it goes in a different section altogether. So this is where we put the fuel for our equipment, not our vehicles. Delivery, some people keep track of the amount it costs for them to ship things or pay for shipping on things coming to them. And these ones are all calculated later on in the video. So we're talking about the capital cost allowance, the motor vehicle expenses, business use of home. So we're going to be discussing those a little further on. And the last one is other. So if there is anything that really doesn't fit into any of these other categories, and it's a substantial amount that you don't want to try and force into any of the other categories, there is a section, and every time you add into the other section, there's going to be a spot on your tax preparation software where you can specify exactly what you're putting in there. Now we can go on to the next section. So the next section that we're going to look at is this calculation of business use of home expenses. Now I have a really large office here. It goes further that way. And so I have some files and I do a lot of work here. I'm here most of the time for business. And so if you have like a restaurant or a storefront or a brick and mortar store, they generally don't allow as much or if any business use of home expenses because you're doing a lot of work outside of the home. But for me, and maybe if you are like maybe a landscaper and you do a lot of your quotes and preparation and bookkeeping and what have you at your home office, this is applicable to you. And the percentage, what CRA wants you to do is they want you to measure the square footage of your house and then measure the square footage of your office and say how long you worked there for. I'm going to claim 15%. That's the percentage that I use. I see most people claim anywhere between 10 and 15%. I usually see 12.5 sort of be the average in what I've seen in some of the work that I've done. So these aren't your business expenses. These are the expenses related to your house where you live. So you probably don't have them on your profit and loss. And if you do, then you've got to consciously take them out when you look at your profit and loss because you're only claiming a small percentage, right? So I keep a total of them somewhere else, maybe on a spreadsheet, because I use QuickBooks all the time. I actually just use a separate class and separate it out when I pull up my profit and loss report. Whatever way you do it, these are the numbers that you or your tax preparer are going to need totaled for the year, and I'm currently doing 2020. So I like to keep them all in the same spreadsheet. So if you want to like just throw in all of your bills and everything in here and total them up, that's a great way to do it. Like I said, I use QuickBooks to track it because I'm very comfortable with QuickBooks. I'm just going to cut and paste this and put it in here so I have it. So what I'm going to do is I'm going to let the T2125 drive, this one, just there's not too many, and then I'll check later to make sure everything's in there. Heat, I'm going to come over here, and there is my gas. And again, to make sure I don't miss anything, I'm going to highlight that in peach, and I'm going to say home heat, so I know which section I've put it in. Then I'm going to come over here, and electricity equals hydro. I think that's an Ontario thing. We call the electricity hydro here. I think that's colloquial. So home electricity. And then over here, I've got insurance. Again, this is just your home insurance right there. I'm going to make that peach, say that I've done it, and I'm going to say home insurance. And over here we've got maintenance. That one I'm not going to be claiming this year. Mortgage interest. Now you can't claim your 15% or whatever your percentage is of your mortgage payments because part of those payments is paying down the principal, and that's not expense, that's just owing less money. But the interest portion of your payments you can claim, and the bank or your financer conveniently sends you a letter each year, maybe January, February, saying how much principal you've paid down in the calendar year and how much interest you've paid in the calendar year. So when you get that in the mail, put it right into your tax file because that's when you're going to need it for this section right here. Now, I don't have that in my annual totals yet, but let's say, for example, for this purposes of this YouTube video, it was $4,600 right there. Next, we're going to do the property taxes, and I have that over here. I'm going to highlight that. Oh, I have to do the equals. There, property tax, and I'm going to come here, and I'm just going to say home, because that's the section I put it in. Property tax. Coming back over here, other. So what have I missed on my annual totals? Well, internet, and we'll talk about that in a second, but water. So we get charged for our water here. So I'm going to put that into other. So I'm going to put an equal sign, annual totals, click that, and I'm going to put in here water. Annual totals, I'm going to make that peach and say home other. So I know where I put it. There it is. So next, let's talk about this part that got missed. There's this vehicle stuff down here, but we're just in the top home section of my spreadsheet right now. And I have tracked my internet. So this is how much the internet has cost me in 2020. And it's not really part of this section because I use more internet because of my business, and I definitely couldn't run my business without the internet. But the internet is not used 100% for business. So, you know, I have my son here, he streams, I got my husband, we watch TV, we watch Netflix. So it's not 100% used for business, but I do use it all day, every day for what I do. So I'm going to claim a pretty high percentage. And I'm going to put this under my office expenses right here. And I'm only going to put, because over here I put the total because we're going to like apply that 15% rule. But over here, we're only putting the direct costs. So I'm going to say plus the internet multiplied, look at the little star. That means multiplied by 0.75. I'm going to personally claim 75% of my internet. So that's going to increase this office expenses box, and I'm going to remember what I did so I can do the same thing next year. I'm going to say business office expense at 75% so that I know what I did when we're asked to, if we're ever audited or reviewed. And I'm going to peach it. Something that I'd like to add before we move on from this business use of home section right here is that you can increase certain percentages. So say, for example, your business used a lot more electricity because you have a wood shop and you're constantly using all the machinery in there, and you want to say, oh no, my electricity bill is so much higher because of the running the business from my home. This can be a higher percentage that represents the amount of your electricity bill that you would say you would be using for business. Also, if you do have like extra portions of your property, so say you have a shop on site, then now that means you can claim a bigger percentage of your mortgage interest and a bigger percentage of your property taxes. Just these values are just trying to get as close to reality as possible. And if you do have a shop on your property that you use for business, that's something to consider when you calculate your business use of home expenses. So that is the business use of home section done already. Next, we're going to go to this vehicle expense portion. And if you're not keeping a vehicle log, I would say start today. So what CRA wants you to do is they want you to say what your odometer says at the beginning of the year, what your odometer says at the end of the year, and the percentage of those kilometers that were used for business, and you can get that total from your vehicle log. If you do use your vehicle for more than 90% business, so let's say you have a car and you do running around, but you also have, say, a work truck, and that work truck you mainly use for work, and then your car you just use for running around. Well, now you've got that work truck that's specific for your business. You're going to use that 90, 95, even 100% for business. So if you have a vehicle that you use 90% more or more for business, still keep a vehicle log for the first 3 months, because now that's going to be sort of a guide or a standard that if you are audited or reviewed by CRA, you can say, look, here's my vehicle log showing how I've used it for, and so your odometer at the beginning, your odometer at the end, all the trips that you did for business. And there are apps that track your mileage, so feel free to use those. Quickbooks has one on their phone app as well, but there's others out there. Now, I think in the States, we actually claim our personal vehicle expenses using like a per kilometer rate. I mean, that's how we do it for employees, if you're an employee at a business. But for your self-employment income in Canada, that's not close enough. Like, you can imagine that if you have like a diesel work truck that takes a beating that you use all the time for business, it's going to cost you a whole bunch more in fuel and in maintenance than if me, for example, I have like a little Pontiac G5 that I just do a bit of running around. I don't really, use a lot of fuel. Using the per kilometer rate just isn't fair. It's not representative of reality. So that's what CRA is trying to do here, is get as close to reality as possible. And to do that, you need a vehicle log. Now, I'm not going to put my vehicle log information in here right now, but let's say, for example, that I'm going to claim 60% of my vehicle expenses. So that's what we're going to use for purposes of today's YouTube video. So what I did throughout the year is I tracked all of the fuel or gas that was specifically just for my Pontiac G5, not my husband's gas. I keep track of that separately. Now, my way of doing that is I only use a certain credit card for my gas, and he only uses the Canadian Tire credit card for his gas. So I was really able to come up with a total quite easily there. You can see how knowing what you need ahead of time makes your life easier at the end. So I'm going to come over here and I'm going to say that the fuel for my Pontiac G5 was this number right here. I'm going to make that peach, and I'm going to say vehicle fuel. Right there. And come back over. By the way, if you have more than one vehicle for your business, you can do more than one of these boxes and do it for each separate one of them. Next, we're going to do interest. Oh, I don't have interest. Interest, this is only interest on if you have a car loan. And again, same with the mortgage, you don't claim a portion of your vehicle loan payments. You only claim a percentage of the total interest that you've paid through the year. And you should be able to get that number from your financer, or at least they can give you sort of an amortization schedule to show you how much of each payment is principal and interest. Though I do have vehicle insurance, so I'm going to go to my annual totals. This is the insurance just for my Pontiac G5. I'm going to make that peach, and I'm going to say vehicle insurance. And then over here, license and registration. So if you get new stickers for your plates, I didn't this year. Any maintenance on that vehicle you can claim. So there's the repairs and maintenance for my Pontiac G5. Again, I track them all separately in my own personal budget because I know I'm going to need it. Vehicle maintenance, like that. So that's everything is peached. And again, if I was leasing my vehicle, we can claim those leasing payments right here. And then we would make sure that these are all totaled up, add them all up. And then again, we can see that this is multiplying this total by 60%. And this A box is going over here. And this C box is going over here. And that is the vehicle expenses of the T2125. Next, we're going to talk about the assets section of my T2125. If you purchase an asset like a vehicle or, large equipment, you cannot claim this as an expense on your profit and loss because it's not an expense. It's something that you have of value. And so we cannot claim the full amount as an expense, but we can claim how much that asset has lost value over the course of the year. Now, we might call that depreciation, but CRA on their taxes specifically calls it capital cost allowance, CCA, the amount that we're allowed to claim in how much our assets have lost value over the course of the year. So each category of asset, called class of asset, they each have like a different percentage that you can claim over time. So vehicles, for example, they're 30%, and equipment is 20%, so on and so forth. So I did not purchase my vehicle in 2020. I purchased it earlier than that. And so I already have a closing balance of how much I haven't claimed in CCA yet, so the book value. And so all I need to do is I just need to look at my 2019 tax return and remember and see that the closing in 2019, that's going to be my opening in 2020. So let's just say, for example, it's $4,562.23. Now, what you can see here is it actually is not claiming the full 30%. And you can see it's taking this cell here and it's multiplying it by 0.3. Now it's not taking the full 30%, and that's because I only use the vehicle 60% for business in 2020. So what it's doing is it's taking that cell right here and it's multiplying it by the percentage that I used it for business. And so it's claiming the 82120. So I'll even put that in there as a note to myself. Business portion of auto CCA. And then this is B. And so this B, that's what's coming over here to the CCA. If I did have class 8 or just general equipment, that would put that in there. And you can see that this box is adding that one and that one together. So this is all I personally need to do for my T2125. And I'll probably do another video on how we would claim an auto that we might have already had when we started the business. And I'm also going to talk about the difference between a class 10 auto and a 10.1. My vehicle actually is a class 10.1. It's a passenger vehicle, so I could even put that in there. And there's more to discuss about that. I'll put a link to CRA's discussion on assets in the comments, but maybe if this is the first time that you're doing your taxes sort of on your own, you might want to just connect with the tax preparer on that asset section. But for my T2125, it was just as simple as looking at what my closing balance was last year. Now, I do say that it's a good idea to keep track of all of the assets that are part of this section right here. So there's an asset tab that I keep that sort of lists what I purchased and when, and what the purchase amount was, so on and so forth. So the last part of this T2125 spreadsheet is the industry code. And I'm going to link to this website right here. It's a webpage from CRA that talks about the North American Industry Classification System codes. That's what they use. They do list some of the generic ones here, but you can click on this link and drill down to your specific industry code from this website. And this is all of the totals ready to plug into whatever tax prep software that you're going to use to create your T2125 or your personal income tax return. Interesting to note, right now our taxable income is $34,800, but over here on the profit and loss, it was $40,000. So you can see that taking the time to add up all of your business use of home expenses and tracking your vehicle expenses, that is going to help you reduce your taxable profit accordingly. And the difference between those two, of course, was the vehicle expenses, the depreciation, and those business use of home. And there you have it. That's how I put together the totals for my T2125 statement of business activities to do my personal income taxes In the comments below, I am including a link to my website where you can download that template that I've been using in the video today. It doesn't come with a lot of instructions though. It really is useful for you if you are comfortable in using Excel. But if you're not going to be using this template, at least now you know what totals you will need to have ready when it comes time to do your income taxes. In my next video, I'm going to show how I take these numbers and plug them into the tax preparation software that I use in order to come up with the actual T2125 statement for my income taxes. I don't put them into that PDF that I showed at the beginning. I plug these totals right into my tax preparation software and it creates the form for me. Thank you so much for watching. Hopefully by sharing how I do my T2125, I have taken the mystery out of what you will need to file your income taxes on time, whether you're doing them yourself or seeing what totals your accountant or tax preparer will need from you. If you liked this video, hit subscribe for more business success inspiration. I have courses available. Find out more in the links in the comments. You can follow me on Twitter and Instagram at BeThatBusiness. What type of business will you choose to be? You need to be intentional. Be that business that is in compliance, that business that files its taxes on time. And don't waste money on late filing fees. Don't give CRA more money than you have to. Be intentional today. Get out there and be that business that thrives.